Good day to everyone. Our topic for today is all about deductions to gross estate. So we have different deductions to gross estate. It could be ordinary deductions and special deductions. But in this video tutorial, we will first tackle the ordinary deductions with the train law updates. First, inclusion to the deductions of the gross estate and considered as ordinary deduction is claims against insolvent person. So when we say insolvent person, a person is insolvent if his assets are inadequate to discharge his liabilities. So being a debtor, he has no capacity to pay his debts as they fall due. Okay, so if his assets are liquidated, the cash proceeds will first be used to pay his preferred creditors. Therefore, we have to follow order of priority here. Okay? Ayan. So first, preferred creditors muna yung mauna. Sino-sino ba yung mga preferred creditors? It could be the government for unpaid taxes or unpaid secured mortgage loan, and the balance of cash proceeds will be used to pay the ordinary creditors. Okay? So in order that claims of the deceased, person against insolvent person may be deducted from the gross estate, it is essential that the amount of the said claims has been initially included as part of the gross estate. So therefore, kailangan muna itong claims natin or receivable from those insolvent persons must be added first in your gross estate, and only the portion which is uncollectible is deductible in your ordinary deductions of that deceased person. Okay, the incapacity of the debtor to pay his debt is proven and not merely alleged. Okay? So, yun yung mga requisites enable for these claims against insolvent person be deductible, but only again to the portion which is uncollectible. Okay? So, we have here an illustration. Mr. Lopez died, leaving a total receivable of 200,000 from Mr. Ramos. So, the latter was declared bankrupt by the court. Magkano na lang yung assets? 800,000 pesos. And out from this, Mr. Ramos has 2 million pesos total liabilities. Okay, so ang analysis natin dito for us to get the deductible amount, which is the uncollectible portion, we have to, we need to get the prorate, okay, of our claims as to the total liabilities, that is 200 divided by 2 million, okay, multiply by the solution of your liabilities less the total assets. So, ang solution nito ng 2 million less 800, it's 1,200,000. This 1,200,000 is the portion which cannot be recovered. Okay? So, that's the 1,200,000. So, pag nakuha na natin yung proration natin or prorate, okay, so i-multiply natin dyan sa unrecoverable amount. So, out of the 1,200,000, yung hindi natin mare-recover is 120,000 pesos, which is intended for Mr. Lopez. So, therefore, sa total na 200,000 pesos na receivable, only 120,000 pesos is deductible. Okay, so if there are zero recoveries, the entire amount of claim will be presented as deduction. Either way, the 200,000 claim must be included in the gross estate. So that's how you compute claims against insolvent person. So the next ordinary deductions will be the claims against the estate. Okay, so claims against the estate are allowed as deduction if the following requisites are present. First one, the liability represents a personal obligation of the deceased existing at the time of his death, except na lang yung mga unpaid obligations incurred incident to his death, such as unpaid funeral expenses and unpaid medical expenses. The liability was contracted in good faith and for adequate and full consideration in money or money's worth. Next, the claim must be a debt or claim which is valid in law and enforceable in court. and the indebtedness must not have been condoned by the creditor. Ito yung importante na dapat tandaan ha, kasi kapag kinondone yan, finorgive na siya. Therefore, hindi na yan claims against the estate. Okay? Or action to collect from the decedent must not have been prescribed. Now here, meron po tayong sinusunod na substantation requirements enable for these claims be validly deducted in the gross estate of the decedent. So we have the following. So in case of a simple loan or in that which includes advances, first, the debt instrument must be duly notarized. Okay, except na lang, okay, if it is not the business practice of the financial institution or lender to notarize such instruments. Aside from that, okay, duly notarized certification from the creditor as to the unpaid balance of the debt. Kailangan din pala yan, no? Including the interest as of the time of debt. So therefore, the one who should certify must not be a relative of the borrower within the fourth civil degree, either by consanguinity or affinity, except na lang when the requirement below is complied with. So when the lender or the vice or president or principal officer of the creditor corporation kung saan nangutang yung decedent, ayan, is a relative of the debtor in the degree mentioned above, dapat merong copy of the promissory note or other evidence of the indebtedness must be filed with the RDO, having jurisdiction over the borrower within 15 days from the execution thereof. Okay, so aside from that, there must be a proof of financial capacity of the creditor, okay, to lend the amount at the time of the loan was granted, and as well as its latest audited balance sheet and the detailed schedule of its receivable showing the unpaid balance of the decedent debtor. So ito, medyo stricto lang po ang BIR pagdating dito sa claims against the estate. Bakit? Kasi nga mababawasan yung gross estate. So dapat yung mga creditors who are vying for their rights to receive their claims from the deceased person must be able to have this proof of financial capacity. Okay? Ang ginaprotektahan lang dito ng BIR is to protect the estate of this decedent person from creditors na may other intention, okay, na wala naman pala silang claims kay decedent, pero they insist that may claim sila. So dapat to protect or to avoid that, meron silang dapat hinihingi na or mabibigay na proof of financial capacity. And aside from that, a statement under oath was executed by the administrator or executor of the estate reflecting the disposition of the proceeds of the loan if the said loan was contracted within 3 years prior to the death of the decedent. Okay, so those are the requisites that must be satisfied and able for these claims be validly included as deductions in the gross estate. Here, a illustration, okay, claims against the estate. Let's assume na unmarried yung decedent dito. So the heirs identify the following obligations of Mr. Raymond, a bachelor who died on September 1. So we have personal loan condoned by the creditor 400,000. So this particular, alam na natin na dapat, 'di ba, hindi dapat kinondone yung credit, okay, yung claims. Kasi kapag kinondone, hindi siya makiging included doon sa deductions. Next, the balance of the purchase price of the car, okay, included ito, paid by the heirs on September 28. Prescribed promissory note, isa din ito sa binabantayan natin, di ba? So, dapat ang claims is hindi nag-prescribe kasi according to the law, kapag nag-prescribe yan, hindi na yan civil obligation, kundi natural obligation. So, depende na lang if it is voluntarily fulfilled, di ba? Ayan. So, kapag prescribe, hindi na ilalagay. We have also bank loan. Okay, this must be included plus the interest on the bank loan. 50,000 bang ilalagay natin? Hindi. Kailan dapat hanggang ang interest lang or ang counting ng interest must be on the date of death of the decedent. So hanggang September 1 lang. So according to the given, 30,000 yung nag-accrue as of September 1. Therefore, 30,000 yung ilalagay natin. So 200, which is the balance on the purchase price of the car, plus the bank loan of 300,000 plus the interest, which is by 30,000. Therefore, yung total deductible claims against the estate is 530,000 pesos. Okay? So, magiging ordinary deduction siya on the exclusive property of the decedent. Bakit? Kasi nga, di ba, we have this matching principle. If ever ang property is exclusive property, so dapat yung deduction niya must be also in the exclusive property. If it is on the common property, dapat yung deduction din is also mapupunta doon sa common property. Kaya, eto since personal ito, okay, ng decedent, so mapupunta ito sa exclusive property. And, since unmarried siya, exclusive naman talaga ang property ni Mr. Raymond. So, ang claims against the estate must be deductible at the portion ng exclusive property ng decedent. Next deduction will be the unpaid mortgages. So, these are unpaid indebtedness secured by a debtor's property, contracted in good faith, and for an adequate and full consideration in money or money's worth. Para maging deductible itong unpaid mortgages, the property must be part of the gross estate at fair market value, gross of any unpaid mortgage. So, dapat gross ha. Where the decedent owns less than all the property covered by the mortgage, only a proportionate amount is deductible. Okay, so here, tatandaan natin, in case, okay, yung bullet number 1, in case, again, the unpaid mortgage payable is being claimed by the estate, verification must be made as to who was the beneficiary of the loan proceeds. Plus, if the loan is found to be merely an accommodation loan only where the loan proceeds went to another person, okay, the value of the unpaid loan must be included as a receivable of the estate. Okay. In all instances, the mortgage property to the extent of the decedent's interest therein should always form part of the gross taxable estate. Okay, so yung kanina, number 3, inulit lang natin. So, dapat talaga naka-include yung property, okay, mortgage sa gross estate natin. Okay, so that's how we solve unpaid mortgages. Now, we have here an illustration. A decedent had a family home amounting to 1.5 million, which was encumbered by a mortgage, nakasecure pala, and a loan. So, ang original amount is 900,000. Okay? Less natin yung nabayaran before the death. So, that's 200,000. Okay? So, now, paid after death, 400,000. Yung present balance niya is 300,000. Now, for us to solve, kung magkano yung deduction natin in the gross estate ng decedent, ayan. Para maging deductible mortgage, just like the other obligation, it must have been incurred before the death and still unpaid at the point of death. So, at the point of death lang. Okay? Yung mga after-death payments, hindi yun pwedeng i-deduct. Ayan. So hence, the allowable deduction for unpaid mortgage shall be the balance of the mortgage at the point of death. So yung original amount is 900,000, right? Therefore, yung binayad lang before the death is 200. So therefore, the balance at the date of death is 700,000 pesos. So yung gross estate mo, naka-include doon yung family home which was mortgage at a value of 1.5. And then yung deductions sa ordinary deduction section, ilalagay natin yung 700,000 na balance sa common property din, following the matching principle. So that's how we solve unpaid mortgages as form or part of the ordinary deductions in the gross estate of the decedent. Proceed, we have here unpaid taxes and casualty losses. Now for the unpaid taxes, in general, taxes incurred prior or before to the date of the decedent's death and remained unpaid as of the date of death are deductible. Okay? So, to be deductible, meron lang tayong requisites na susundin. Taxes should qualify as claims against the estate. They must be enforceable obligations of the decedent at the time of the latter's death. So, the following taxes are deductible from the gross estate. Ano ba yun? Ayan. First is property taxes. Okay? Accrued prior or before to the death of the decedent. Aside from that, unpaid taxes on income received by the decedent before his death and gift taxes on lifetime gifts, kasama pa yun. Or yung mga donation inter vivos natin which are unpaid upon death. And excise or transfer tax in connection with either a necessary sale of estate assets or a distribution in kind. In this manner, kapag ganito, the tax is deductible as a judicial expense, not as unpaid taxes. So, always remember that. Okay? So, yan yung mga pwedeng ma-deduct. Ano yung mga hindi pwedeng? Okay? Na maging deduction sa or as unpaid taxes. Yung income tax upon income received after the death. After yun property taxes na hindi naman nag-accrued before the decedent's death, and estate tax. So, sana klaro tayo dyan para hindi tayo malito. Yung mga prior, okay, or before the death of the decedent, yun yung mga property taxes, unpaid taxes, or gift taxes na pwedeng i-deduct natin as unpaid taxes. Basta, alam natin yung limit lang na prior or before to the date of death. Okay? So, next is losses. Okay, losses. This include all losses incurred during the settlement of the estate arising from robbery, theft, embezzlement, fire, shipwreck, storms, and or other casualties. Okay, so in here, the loss should have been incurred on the property included in the gross estate not later than the last day for the payment of the estate tax, as long as the amount of loss is not compensated for by any insurance. Kasi kapag may insurance, siyempre may matatanggap ka dyan. Diba? So, hindi siya pwede. Pero kapag walang insurance or extrajudicial settlement, pwede siyang i-deduct as casualty losses. And aside from that, they have not been claimed as deduction from gross income for income tax purposes. So, dapat walang double deduction. Kung na-deduct na siya to the other types of tax, hindi na siya pwedeng i-deduct dito sa gross estate natin. Okay? So again, hindi dapat compensated by insurance, hindi siya na-claim as deduction, ayan, sa other types of tax. Dapat nag-occur siya during the settlement of the estate and nag-occur siya before the last day of the payment of the estate tax. I have here an illustration for the losses. Mr. Ramos died in a little car crash on November 2. So, the following losses of properties were identified by his estate administrator. So, losses at the point of death, we have the value of the car destroyed, which is 1,200,000. Then, pilferage loss on the merchandise revealed by the physical inventory count on October 31. That's 80,000 pesos. We have losses since the death of the decedent. Okay. So, we have fire loss on an insured building. Okay, meron na tayong keyword, insured pala to. That's 2 million. So, meron na tayong hint saan hindi to kasama. Kasi may insured. Okay, may insurance. Theft of personal values of Mr. Ramos on January 1. It could be, kasi nga, ayan, casualty loss ito. Value of cash robbed from Mr. Ramos residence February 14. Yan. So, 620. Loss on robbery yan. Pwede natin yung i-include as casualty loss. Value of inventories lost on the shipwreck December 18. December 18. To be claimed in the income tax return of the estate. So, ayun. Dapat doon siya sa income tax i-deduct, hindi sa gross estate. Value of an uninsured car destroyed during May 1. Okay. Of the current year or after, okay, the date of death of Mr. Ramos, that's 800,000. And unpaid loans receivable from bankrupt customer. So that is 100,000 pesos. So after analyzing the different losses here, okay, our deductible loss is only magkano? 800,000 pesos. Kasi, we have to take note that the loss incurred before or at the date of death is non-deductible. Tingnan mo yung car. The value of the car destroyed on the crash is non-deductible because the car will no longer be included in the gross estate of the decedent. So if the property is compensated by insurance, the proceeds of the insurance is included in the gross estate, but still, no loss deduction is allowed because the same do not affect the hereditary estate. Okay? So, yung pilferage loss naman on inventory will not be deductible since the inventories were lost before death and are not part of the gross estate. Okay? Fire loss. Okay. On the building is not deductible. Bakit? Kasi nga may insurance. Ayan. The loss on the shipwreck is claimed in the income tax return. So, hindi din pwedeng i-deduct sa gross estate kasi meron na siyang corresponding deduction doon sa other types ng tax na babayaran. Next, the loss of uninsured car caused by storm is non-deductible as it is beyond 6 months from the date of death. Okay. And the unpaid loan receivable from bankrupt customer, bakit hindi yan included? Kasi nga, under siya sa separate category as claims against insolvent person. Therefore, yung total natin dito is only 800,000 pesos. Ordinary deduction will be transferred for public use. So in here, the amount of all bequests, legacies, devices or transferred to or for the use of the government of the Republic of the Philippines or any political subdivision thereof shall be deductible from gross estate as long as the said amount is used exclusively. Again, exclusively for public purposes. So, a donation made other than the Philippine government exclusively for public purposes is not allowed as a deduction from the gross estate. Other than although it is for public purpose pero hindi naman for government. Okay? So, the transfer should be through a testamentary succession. Oral transfers are not deductible. Tatandaan natin yan. Unless the other spouse has written consent with respect to the conjugal property to be transferred in favor of the government. The donated property is deductible from the exclusive portion of the estate. Aside from that, unless the wife expressly joins in making the donation, it shall be deemed to have been made by the husband alone. Okay? So, kung hindi naman pumayag o nagbigay ng consent itong wife na to, so, it is deemed to have been made by the husband alone. Ayan. A person cannot donate a property which does not exclusively belong to him. Unless na lang stated in the property transferred for public use is a conjugal property and the transfer is with the consent of the surviving spouse. Usually kasi kapag mga transfer for public use, exclusive property ang binibigay dyan. Kasi kapag common property, kailangan pa ng consent ng surviving spouse. Ganun ha? Ayan. Ayan. So the property is generally presumed as an exclusive property of the decedent. Ayan. So, yun yung tatandaan natin. The disposition must be in the last will na nag-take effect siya after death in favor of the government and dapat for exclusive public purpose only and the value of the property has been included in the gross estate. So, we have here an illustration. Mr. Asuncion devised in his will the following properties. Kapag devised ang word or term kasi ang binigay dyan or dinonate, it's real property. Yan, a commercial land to be given to public school, that's 2 million. Land and building were given to a government-owned and controlled corporation. Aside, okay. As far as I am concerned, GOCC hindi naman talaga siya fully operated by the government. Okay, majority lang ng composition nila are operated by the government. The rest is private individuals or corporation. So here, if we are going to analyze, the 5 million is included sa gross estate ng decedent. But only the 2 million can be claimed as transfer for public use. It's because GOCCs are commercial and are not for public purpose. Kaya nga, di ba sinabi ko kanina na hindi sila fully operated by the government. Meron yan silang mga private corporation or individuals na kapartner and not GOCC. So, alam na natin kung paano i-identify kung deductible ba siya or hindi for transfer for public use. Last one, which is included in the ordinary deduction of the decedent, is vanishing deduction. Okay, what is the nature or concept of this vanishing deduction? Okay, so here, to lessen the heavy burden of paying estate tax due to the short period of property transferred by reason of early deaths, the property previously subjected to estate or donor's tax may be allowed to be reduced by a certain determined amount called vanishing deduction. Ito yung mga properties na dumaan from previous transfers. And from previous transfers, nagkaroon or nagbayad doon or ng estate tax. Kaya, nung pagdating sa'yo, kung ikaw na ang decedent, ayon, so that property is included and taxable na naman for gross estate. So, you will have a privilege or yung property na yon will be lessened through property or vanishing deduction. But we have rules for that. Okay, so if the same property is included in the gross estate of the present decedent, okay, its value may be deducted in computing the net taxable estate, subject to the following conditions. So, dapat, the present decedent died within 5 years. Okay, from the receipt of the property through gratuitous transfer, inheritance, under lucrative title po yan. Next, the property from which a vanishing deduction that is being claimed must be located in the Philippines. An estate or donor's tax must have been actually paid. Okay, dapat actual payment ha. Ayan. Mere filing of return is not sufficient. Aside from that, the property in which vanishing deduction is being claimed must be identified as one received from the prior decedent or donor, and the last is no similar deduction must have been allowed for the same property in the estate of the prior decedent. So we have here a period, okay, in which meron tayong ibibase na vanishing deduction rate. Okay, so itong rate na to yung magiging basis kung magkano yung magiging deduction natin sa gross estate pagdating dito sa mga property which are previously taxed by estate because of the previous transfer. So, ang pinaka natin dito, pinaka keyword is dapat from the previous transfer hanggang sa present transfer dapat 5 years. And dapat yung property must be located in the Philippines. So, kapag that is 1 year or less, vanishing deduction rate is 100%. Nabigay sa'yo. Okay? Pero kapag more than 1 year, but not more than 2 years, 80%. More than 2 years, but not more than 3 years, 60%. More than 3, but not more than 4, 40. If ever more than 4 years, but not more than 5, that's 20%. So, for us to solve for the vanishing deduction, we have procedures here that we must consider. First is determine the initial value or the value to be taken. So, the lesser amount of the value of the property at the date of the previous transfer or the value of the property at the date of death. So, the lower. Okay? Or the lesser amount. Kung ano yung lesser, yun yung gagamitin natin. Since deduction ito, gusto ng government, the lower. Okay? Number 2, magde-determine tayo ng initial basis. The initial basis will be the initial value reduced by any indebtedness on the property which was assumed and paid by the present decedent before his or her death. So, ang computation niyan, yung initial value na na-identify natin on procedure number 1 less yung indebtedness assumed and paid before death. Okay. Halimbawa, may mga mortgage na binayaran si decedent. So, ililess natin dyan para yun yung magiging initial basis natin after the deduction. So, that's the initial basis. After nyan, i-determine natin yung final basis. In this final basis, this will be computed first, your initial basis, and then ililess natin yung how do we compute this one? The proportionate deduction from your initial basis. So first, identify muna natin lahat ng losses, indebtedness, taxes, and transfer for public purpose before vanishing deduction. Okay, add natin yan, i-multiply natin doon sa prorate na na-create natin on your initial basis over your gross estate. Isa to sa mahirap i-solve kasi you need to identify first your gross estate. Okay, initial basis over gross estate times yung mga losses, indebtedness, taxes, and transfer for public use para makuha natin yung proportionate deduction from your initial basis. So if you already solve it, initial basis less yung proportionate deduction, that will be your final basis. Doon tayo magmumultiply ng vanishing deduction based sa different vanishing deductions rate. Okay? So by that, let us solve a problem. So here we have Mr. Harold died with the following properties and allowable deductions. So meron siyang car received as inheritance 3 years ago. So itong inheritance na to, this is from previous transfer. So therefore, okay, it will be subject to vanishing deduction. Pero itong car na to must be included in the gross estate. So, for us to know, okay, before tayo mag-proceed, tapusin na lang muna natin. So, may mga other property siya that makes his total estate 10 million. And meron tayong mga allowable ordinary deductions, mortgage on the car. Value siya upon inheritance 300. Yung namatay na siya 100. So, therefore, may payment na may binayaran si decedent na how much? 200,000. So, gagamitin natin yun mamaya to get our initial basis. May TPU din siya or transfer for public use, 300, and indebtedness and taxes, which is 1.3 million. So, yung total deductions niya before vanishing is 1,700,000 pesos. Analysis. So, ang vanishing deduction natin will be computed as follows. First is get the initial value. As I said a while ago, the lower or the lesser between the value upon inheritance and the value upon death. So, dito sa example, yung value at death, yung pinaka-lesser, which is 1 million. Ililess natin yung mga mortgage assumed at saka binayaran ng decedent. Okay, if napapansin nyo kanina, yung sinabi ko, yung may mortgage na before inheritance or value upon inheritance, yung mortgage sa car na yan is 300,000. Tapos, yung namatay siya, 100 na lang. So, merong binayaran si decedent dyan na 200,000 pesos. Therefore, 1 million less 200, our initial basis is 800,000 pesos. Ililess natin yung proportional deduction to other ordinary deductions. Ito yung kanina. Diba? 1,700,000. Now, initial basis, which is the 800 over the gross estate, which is 10 million, multiply by the proportionate part of your ordinary deduction na 1.7. Therefore, ang proportionate deduction niya is 136,000 pesos. So, our final basis, i-deduct lang natin yan sa initial basis, and that is 664. Since 3 years yan siya, ang 3 years is 60%. So, therefore, 60% ang magiging vanishing deduction natin doon sa deductions to gross estate. So, the vanishing deduction is 398,400 pesos. So, there you have it, the ordinary deductions in the gross estate. So, I hope nakatulong tong video tutorial na to for you to understand and answer ordinary deduction. So, please stand by and hang on as I make the second part of this video, which is the special deductions. So see you next meeting for our next video tutorial.